much comfort from the yields coming down around the world because they're coming down on growth concerns. The European PMI numbers were horrible. Germany is at 44. And in China, while the GDP numbers beat, there's a lot of question marks about it, especially given what's happening in retail sales.
The markets are yet to recover. Despite a mid-month rally after the release of the latest CPI report, things are still very low in the stock market. Raoul Pal, founder of Real Vision, an economic and investment commentary platform, and a world-renowned investor, reveals why he's still very confident about cryptocurrencies despite the difficult year the market has had. Navigating the economy may be tough, but navigating the subscribe and like button is really easy. Don't you agree? Subscribe and give us a thumbs up. We would love to have you on board. Now to our interview.
They're raising interest rates and they're reducing the balance sheet. That's taking money out of the system. So it's a game of musical chairs. So what happens is people are scrambling for dollars and you see currencies falling around the world, but also people can afford less assets because there's less leverage, less money around. So the price of Bitcoin, NASDAQ, everything falls. I mean, literally everything, house prices. And the dollar goes up because there's less dollars around.
That's what's happening right now.
That's happening right now. So if we go back to 2020, what happened was massive liquidity coming in plus debasement of currencies, quantitative easing. Right now, we've got the opposite of debasing of currencies. We've got quantitative tightening. So the currency is actually getting stronger. So the assets should go down versus that. But back then, we had like a 50% increase in the Fed balance sheet. We've never seen that much monetary expansion in the modern history of the United States. And so what happens is you then look at all of the assets, and what did best out of that was Bitcoin or all of crypto. Why? Because not only, so gold did okay and equities did well, but Bitcoin did really well because you had both the technology bet and the monetary bet. And so it outperformed. So if we're in an age when the central banks are straddled, the global economies are straddled with debt, and this doesn't apply to India as much as it applies to the Western developed nations, is their only answer is to print money to avoid catastrophe, because who pays the debt? So the central banks backstop it. So over time, they're going to keep doing this trick because it's a magic trick, because it makes asset prices go up and everyone looks like they're rich. But you're not rich because you actually can't afford a house because it keeps going up in value because your wages don't go up. And the asset you need to own for all of that is crypto, because it's the thing that outperforms and gives you more purchasing power.
Earlier this year, the big concern was the huge deficit of the U.S. government. The U.S. deficit had reached almost $9 trillion. This was caused by the need for the government to stimulate the economy and provide relief for the citizens during the 2020 COVID-19 pandemic. The pandemic had caused businesses to close, and the economy was in a stall, leading to a free fall in the assets market. To salvage the situation, the government had released over $5 trillion in stimulus money. The issue was, GDP had declined so much that at the end of the day, the U.S. had a fiscal deficit of $8.7 trillion. Hedge fund manager Boaz Weinstein had warned earlier this year that we should prepare for tough times ahead. He had said that there was no way that the market was coming out of Washington's plan to reduce their deficit. Weinstein had likened the present situation to that of the Japanese stock market in 1989. Indeed, as Weinstein had predicted, the Fed has started aggressively cutting down its balance sheet. With interest rates being hiked at the steepest rate in over 40 years, the Fed is succeeding massively in recouping a lot of the credit it flushed the economy with. The Fed had started selling off $47.5 billion worth of treasuries per month at the beginning of its QT strategy. But the amount has been scaled up to $95 billion per month, which would double the constraint the economy is currently undergoing. Another question is, how far have assets fared since the pandemic? Bitcoin had peaked at $9,500 in the heat of the COVID-19 pandemic and bottomed at $6,000 that same year. Bitcoin is now hovering at around $19,500, which shows a growth of over 100%, even if we use the 2020 peak price. On the other hand, the S&P 500 has gone from 3,000 points to only 3,700 points, a mere 23% growth since then. This is despite the fact that Bitcoin has crashed by over 70% from its peak price. Raoul argues that Bitcoin has been a better hedge against inflation than any other asset, even gold.
Deflation is a structurally larger force. Why? Because in the Western world, the population is aging. It's completely the opposite of India. So India average age is 28, the United States is 58, and Europe is older. So we have a record number of retirees. Now, if you've ever seen your parents retire, one thing they end up doing is not spend as much money. Why is that? It's just human psychology. You don't know how long you're going to live for, and you've got a fixed amount of money left. So the first thing you say is, oh shit, I need to stop spending because I don't want to be 85 and homeless. Right? So it's a really strong thing. So spending collapses, and so the economy tends to be deflationary. But then there's another mega power, which is globalization. Even though we're in globalization retreat, don't forget, places like India become the net beneficiary here. If China's not the great counterparty, then India is more neutral in the middle and is a more trusted counterparty with the rule of law, etc. So globalization continues, but maybe more regional. Okay. But then there's the really big super trend, and that's technology. Basically, everything that gets digitized goes to zero in value. I mean, everything. So cloud computing, computing power, computing chips, I mean, you name it, televisions, mobile phones, everything goes to zero. So it's an incredibly deflationary force. And that's only about to accelerate because we've now got green energy, which is getting cheaper and cheaper and cheaper and cheaper, and that's going to accelerate. We've got artificial intelligence, which is replacing humans, robotics replacing humans, biotech sciences, we've got Internet of Things, we've got so many, we've got space, we've got so many massive technologies all going exponential in their adoption all at the same time. That's a very, very, very deflationary force. So I think deflation is the more likely outcome.
Raoul Pal points to the diverse forces that are deflationary and bound to take effect much more profoundly than we are anticipating. One issue is the U.S. demography, especially the age of demography. The United States comprises a majority that are over 50 years old. Age demography has an effect on how and what a population spends money on. A population that is composed mainly of retirees or people who would soon be retirees is very likely to be a fast-growing one. Their goal is to save and not invest. The U.S.'s GDP growth has slowed down massively and is unlikely to experience an exponential growth as the driving factors such as a young demography, emerging markets, and new market frontiers are all lacking. Raoul Pal is convinced that Europe and the United States would certainly face a deflation problem anytime soon. Another issue is technology. Technological advancements disrupt markets and lead to deflation. This is because technology is always seeking to cut cost and is also rapidly eliminating human labor. According to Mr. Raoul, everything that technology adapts begins to tend to zero value. Technology is very cheap, and we would see tech destroy many traditional markets. Technology is a powerful deflationary force, and we can expect to see advancements in tech bring prices down.
It's inevitable because we as humans want it. We as humans understand some of the fragilities of the system. Humans' two strongest emotions are fear and greed. Crypto works for both of them. Fear is, I want to keep my money. I don't want it taken away, and I don't want it debased, and I don't trust you. And greed is, hey, this is a perfect behavioral economics incentive system where if we all participate in the network, the value of the network goes up. So this is a very powerful force. Imagine if Facebook, when it started, so Facebook works by giving you a bunch of free tools, monetizes your attention span, and the shareholders get rich, and you kind of get abused, but you get the free tools. So it's a trade-off. Imagine if Facebook had given every single user free shares. You would have told everybody about it and would be passionate about it. That's all crypto is.
Raoul Pal believes that the adoption of crypto is inevitable. We see a lot of movement in the regulation of cryptocurrencies, and this could be the beginning of the much-anticipated adoptions. Do you have faith in cryptos to make a strong comeback? Let's have your thoughts in the comments below. Don't forget to like and subscribe for more.